Good early morning, peoples. Let's jump into Tesla and TSLY. So this is like a ping pong ball. It goes from 219 up to 232 a couple days ago, then back down to 222. Now we're back to 232, right? So Tesla was up 4.24 and we were up 3.49. So we're getting capped a little bit. So we had written 230s, 235s, and 237s, right? So on the 230s, we're capped um, because we're at 232, but they're the small quantity, right? 600 and 650. But the big guy, the 3,100, 31,735 are at 235. So that's a key area that we want to stay below so we win our weeklies. So let me show you in summary what the weeklies. So there wasn't anything else, no new shares added, no trades. But with this 2 days to go, it's kind of critical. So let's take a look at the status of the weeklies. And this shows you a lot clearer, right? So here we are at 232.07. And we've been ping ponging. You know, I had said to you that we would go up to 234 and fill that gap. And then we went back down and now we bounced up. So the perfect scenario is we hang around 230 and close the week and win all of our weeklies. But you can see the big guy has the big money, right? The big guy has the big money. I think I've heard that somewhere before. Or was it save 10% for the big guy? Okay. Sorry, I don't. It just whenever I say that, but it made me think of that. Okay, guys. Let's flip to holdings and see the real cash involved. Okay. So we collected 9.2 million. And so obviously that's a lot more money than 300 and 339. And right now it would cost us 8 million to buy it back. So we need all that to just disappear. So if we stay below 235, it's exactly what happens. All right, on the small quantities, you know, this one's 300, this one, it's already costing us double. But if we win all of this, then who cares if we lost 300,000, right? So if we stay 231, 232, that's going to drop also. If we stayed at 232, this 5 is going to become a 2. So we really would win. We would just about break even or win a little bit of that money. And then we'd win all these. So that's fabulous. You guys know from listening to me how that all worked. So where are we on our synthetic? Well, we bounce back and forth. We had the synthetic at 93, and then it went to 121, and now we're back to 89. So um, that's not bad. The reason we're really at 94 is when I show my graph down here, I never worry about the small quantity 265. It's real. I just have been graphing the larger amount. Okay, so let's jump and go over the rest of the relevant issues. Hold on a minute. I got a cough and sneeze, it feels like. Okay. All right. The um, other thing, so we closed at 50. Whoops, this is not true. We are up. We're back up 1585. And let me update that. That is 797. No wonder. All right. Always something to do. 797276550. All right. That probably will get us close. Yep. 1587, peoples were 2 cents on sale. Run out and buy TSLY on sale. Actually, I love where I think TSLY is going. I know I've told you guys a lot on that. I really need to do a video probably just talking about what all I see in Tesla. And when you're really bullish on an underlying, then, why not own an income that you're really bullish? People buy NVIDIA for that reason, right? So why not own TSLY? Well, someone could say, well, Bruce, did you not see what it did over the last 18 months? I lost money. I get it if you lost money. Like I said, on an income fund, when these stocks go down and they go down aggressively, you don't go down quite as much. But what difference does it make if the stock goes down 78% and you're in TSLY and you get some income and your net loss was 72%? You still went down a lot of it, right? But it's not accurate to say you go down 100% because they're always going to write these calls and you're always going to be underneath them and you're going to collect. Here's the problem. If when it turns to go back up in an income fund and it roars up and they're writing weeklies out 5% every week and it's up 8%, 11%, 7%, then you're not able to capture that naked call, that weekly. And therefore, you're making some on the synthetic, but you're losing a bunch on the weekly. So you can't, you might get 1/3 of the rise. Well, you got 95% of the down movement and only 1/3 of the rise. Now, people are always saying that, oh, when you're capped, you can only get 15% of the upside. Well, if they stay capped every single week or 98% of the weeks or 85% of the weeks, then you're going to not participate in much upside. And that is a negative. So, and only really volatile, high flying stocks fall into that category. You've seen some at times at NVIDIA, but if you notice, and when NVIDIA's been going down, from 140 something after the split, I think 146, 140 something, and then it just went down to 100 and bottom. Now all of a sudden it's back to 121. But how it did it, this recent 13%, it fully participated. So it just has to do with when they ride and when it goes down and the timing. But if it were to just keep running right now to 170 and going up, outrunning all the weeklies, then it wouldn't participate as much. So I just like to educate along the way and talk that it's somewhat unique. So I always recommend, because I do it myself, when you're super bullish on a stock, own a little bit of the underlying. Now you say to me, well, Bruce, I would, but the stock's $180. I can't have as many shares. Well, but you're still the capital that you would deploy. But I'll tell you another technique, and I love this, and I do it myself. When I'm really bullish and I see what I call an impulse wave, where it really looks like it's going to run aggressively over, 3 weeks, 4 weeks, 6 weeks, and I identify it on the chart and talk about it when I'm doing this stuff, then I'll go out and buy a 2x. ETF on that underlying. There's a ton of them on NVIDIA. There's a ton of them on Tesla. TSLL is one of them. I think. Don't quote me on it without looking at it, but I'm pretty sure it is. And then I think there's obviously 2x to the bear. So always just be careful when you start, memorizing the tickers, and just make sure before you buy that you intended to buy a 2x bull, not a 2x bear, right? But anyway, the deployment of capital in that while you're holding the income fund, then you're getting some income. It's just that you're not participating on that upside, right? And then I don't hold 2x's because they decay when it gets flat, up a tiny bit, or slightly down, and just holding. Right? So get in it. use it for its leverage, and get out. And maybe when you want to get in and say, I can't tell it's fit, then just go a single, right? Not 2x, a 1x, if you will. But at least it directly responds to the underlying and can't get capped because it's not an income fund, right? The reason these funds can get capped is because they're playing the income game. They wouldn't even be doing the naked weekly if they weren't trying to capture income because their synthetic is already long the stock. They'll participate 100% in the stock movement, but they're writing the weekly so they can generate income. I mean, don't get me wrong, they can get some income on the synthetic, but the idea is they're only rolling those over to a new synthetic like once every 6 weeks, every 2 months, at earliest a month at a time. So that's not intended to just be income. That truly is ROC, you're returning capital. So that's why they have the weeklies, but the weeklies can hurt you when they outrun where you write them. So, anyway, education, education, education. Enough of that. Let me just finish on this. Okay. So you saw our weeklies, you saw where we stand on the holding. Let's just jump over to payout and finish up. So TSLY's in good shape. Why this month? Because we collected a bunch of synthetic income, okay, on those synthetics. We have a loss, $93 million loss. It keeps going back and forth, and that's the two added together. We have 89 on the 260, and we have another 4 million loss on the 265, but those expire on 8/16. So it's a non-issue for the payment coming up. They're going to declare next week, right, on 8/6 and pay us on 8/8. So right now we got 205. We want to win these weeklies, keep that money up, write another weekly, okay, on 8/2, collect some more cash, and then we'll be in a situation where I think we get $1 or $2. Again, it depends on where we are here, right? Right now we're at 1585. So I'm sensing, a 70-ish. They could be between 70 and 80. If they have a total of $2, then it's not a problem paying $1. They're not going to pay us $2, not with a liability out there and right now, if it ran past that 93 and went up to take that away, then we'd be getting killed on the weekly. So any money we made over there, they would have to roll it and buy it back. So anyway, sorry to give you so much details on it, but I try to just explain. I call it yin and yang. One's good, one's bad, and they kind of offset one another. And if you thread the needle, you get the exact right price. You can kind of get both. And that's optimal just in these income funds. And that's why I bring up, if you're super bullish, to think about putting some other capital. Some of you're going to live off this income and you really need it, then okay, I got it, right? You don't have other income that you want to put out on the growth or the quick hit, okay, like a 2x. All right, guys, so that's what I got. I will do this weekend my declaration predictions on all of the yield max single stock funds coming up for 8/6, but I like to keep you abreast in the ones that I'm doing here. So we're still looking good, super bullish long term, medium and long term. I tell you that it's not going to go to $14 in 2 weeks? I don't know. But do I think that the Tesla stock is going to go into hundreds, 500, 1,000, possibly 2,000 in 5 years? Absolutely. I just think that it's got too much technology to not ultimately win. Okay, guys, again, this is not financial advice. I'm not a financial advisor. Have a great day ahead. Bye for now.